Hello everyone, welcome to Gover Academy. I am Vineet and I will just continue my previous sessions where I was telling you something about complex journal entries. And guys, I asked you a question that why we do not record trade discount in the journals ledgers anywhere. I got no answer in the journal. Okay, no issues. Let me give you the answer. Trade discount is not a transaction actually. How? Think you are a wholesaler. You are going to purchase goods on bulk, big quantities at trade discount. The cost which you will pay will be the amount which is after subtracting the trade discount from list price. So you will start recording with the amount you paid for the goods when you got the goods in the business. Right, guys? That's why trade discount will not be shown as the term trade discount debit. It is just calculated. Why? Because you paid after that the cost which we will record. But cash discount we have to record. The reason is I purchased something at a particular cost and I am selling it at the price less than that cost. It is already recorded, right? Cost is already recorded in my books. And now I am selling at the some price less than that cost. I have to justify. To justify, I will record the difference as cash discount. Okay, guys? So let's continue our session in which I will tell you how to make ledgers and trial balance. And as usual, to save time, I have you can see written small some entries, some journal entries, 5 entries, and on the basis of these entries, I will tell you how to make ledgers and trial balance. So guys, how we start it? See, what all terms we have. I have cash, capital, purchase, sales, wages, then Michael. I have 5 different aspects in these entries. What I will do is the first step, I will make format for ledgers for all the aspects I will have in the journal entries. You can see cash, capital, purchase, sales, wages, Michael. I have made the ledger format for all these aspects which I have in my journal entries, and the format is date particular. This is JF, journal folio, means the page of journal from where I am making record in my ledger. Then debit, credit, and balance. What balance is? See, I have to see the aspects are what? Expenses, incomes, assets, or liabilities. If it's asset, its debit is positive. Capital, liability, credit is positive. Expense, debit. Incomes, credit. Expense, debit. Right? Like this. This is Michael. Let me see who is he. I have purchased goods from Michael. That means he is my trade payable. I have to pay him. Liability, right? This is how we have to judge. The particular aspect of which I am making ledger is what? It's an asset, it's a liability, expense, income. We'll come to know about it more when we do the question. Let us start it. How we start the question? Now let's see the first entry. It has 2 aspects, cash and capital. That means it will be recorded in these 2 ledgers, cash and capital. Let us see how. 2025 Jan 1. I am making cash and the first entry has cash in the debit side. You can see I will just write in the debit side. And 2025 Jan 1 again. Capital amount is in credit side. So I will write down the amount in the credit side. This is how I will start. And I cannot write cash in the cash. I can write capital in the capital. So I will record the opposite aspects, the name of opposite aspects. What is opposite to cash? Capital. This will tell us that cash come in, debit what comes in, right? By means of capital, right? And here, what is opposite to capital? Cash. Capital comes in the form of cash, right, guys? Now next is next is purchase and cash. That means we have to record this into a two general ledgers, cash and purchases. Let us see the date. Date is Jan 2. Purchase is in cash is in credit side, so I will just write in credit side. I will see the cash like this. And purchase again 2025 Jan 2. You can see purchase is in debit side, so I will record in debit side the amount. And opposite to cash is purchases, so I will write the opposite aspect, right guys? I hope it's clear, not tough, right? And here purchase, opposite to purchase is cash, I will just write cash. Right, now see, it's debit, only single thing, so I wouldn't balance here. Now cash is an asset, debit is positive, credit is negative, right? Debit what comes in, credit what goes out. So when it's credit, that means cash goes out. 10 minus 2, we have 8 remaining. Like this it goes, right guys? Debit what comes in, credit what goes out. If it's in credit, that means cash goes out. We have 10,000, but out of 10,000, 2,000 goes out. We have still 8,000 like this. And here only single, I will just record here the single one because we have nothing for now. I will just record the same thing here also. I will just record the same thing. There's nothing. I will just start with the balances like this. Now let us see the third one, cash and sales. Again, the two aspects will be affected, two accounts. One is sales, one is cash. Jan 3, 2025. Jan 3, you can see cash and sales. Cash is in which side? Debit side. So I will record in debit side. Right. Sales. Sales is in credit side. So I will record in credit side. 1000. Now, opposite to cash is sales. So I will write here sales. Opposite to sales is cash. I will write here cash. Now, debit what comes in? So 8 plus 1, 9,000. Here, this is income account, right? For now, it's single thing. So I will just write the amount here. There is no other transaction for now. If there was some more transaction, if it's in credit, incomes increase credit, then plus. Incomes decrease debit, then minus. If I will write here, then minus. I will write here, then plus. Right? Now, let us see the next transaction, number 4. Wages cash, two aspects. That means cash and wages. Let me copy here. Jan 4. Wages 2025. Jan 4. Right? Now, you can see wages, where is cash? Cash is in debit or in credit side, so I will write in credit side 500. Wages in debit side, I will write debit side 500. What is opposite to cash? Wages, right? What is opposite to wages? Cash. Now again, credit means goes out, it's 8500. Am I right? Here it's simple, so I'll just write down the same balance. Now next transaction, purchase Michael. Again, it will affect two accounts, purchase and Michael. Okay, I will just write the amounts. Jan 5. Purchase is in which side? Debit side. Okay, I will write debit side. Fine. And Michael is in credit side. I will write in credit side in Michael. 700. 2025. Jan 5. Opposite to purchase is Michael. That means they're saying purchase goods from Michael. Goods comes in, right? Expense. We have made an expense. Purchase is expense, but we have purchased from Michael. We have not paid cash, right? Here, opposite is purchases. We are saying we have purchased goods from Michael. Okay, we have to pay liability, increase credit. Now, expense, debit, increase, credit, decrease. So our expense has become 2700. Right, guys? This is how we do it. Now, this is what we have to do in ledgers. I told you the base. What I told you, let's just go fast forward it. We have to record all the aspects. We have to make ledgers for all the aspects we have in the entries. We start recording the two aspects. We cannot write the name of account, cash we are making, we cannot write cash here. So we always write the opposite term, opposite aspect, which is against cash. When we are making capital, we'll write opposite aspect, which is against capital. When we make purchases, we'll write the opposite aspects, which we will have against purchases. Like this, we'll do it. Okay, guys. Now, if we talk about trial balance, see what I will do is some simple thing. I will just copy all the ledger headings first, the cash one, and the next is capital, right? I'm just copying, right? Then the next is what? Purchases, I am copying the purchases. Then I'm copying the sales. Then I'm copying the wages. I've copied everything. Nothing else I've done. And Michael. Now, how we decide that which aspect will have debit and credit? Two ways. First, I will tell you the base. Let us see the small trial balance, right? All the assets comes in debit side. All the liabilities are in the credit side. All the, what can we say, uh, expenses or losses, debit side. All the incomes or gains, credit side. Okay. Now, cash is an asset. 8500. It's positive balance, debit side. If it's negative balance, credit side. Capital is liability. Liability always in credit side, right? Then purchase is expense. Expense always in debit side, right? Sales income. Income always in credit side. Wage is expense. Expense always in debit side. Michael trade payable. Liability. Liability always in credit side. This is how we do. Then we total. Both the sides should be equal. If both the sides are not equal, it will not be equal this in this question also, because this is an imaginary question, right? We'll transfer the difference and write the word suspense, which I discussed when I was taking the video of rectification of errors. If you want to know more about suspense, you can go to my channel and watch the video rectification of errors, one-sided errors. You will come to know everything about suspense account, guys. So guys, I think it's clear to you. It's not tough. This is how we have to make ledgers and trial balance so easy. So we have done our journey till trial balance. I will just break the journey before doing the financial accounts, the statement of P&L. I will just make some videos on international accounting standards. You should know the base, theoretical base also, right? On which the pillars on which accountancy is, is based. So just wait for my videos in which I will discuss IAS, International Accounting Standards, one by one. Take care, bye. Have a nice time.